Hi and welcome everyone. We are ready to start one of today's events. My name is Rasmus Køjborg, and on behalf of HC Andersen Capital, I have the pleasure of welcoming CFO Sandra Garn from Boozt, who will take us through the Q1 report that was published last week. So a warm welcome to you first, Sandra.
Thank you.
And before I hand over, also a warm welcome to all of those of you who signed up for today's presentation. As usual, you can ask your questions in the chat, and should you not feel comfortable doing it in English, you can do it in Danish, and I'll do the translation for Sandra. But with that, I'll leave it to you, Sandra, please.
Thank you. So I will just go through a short presentation of our small update from the quarter. And so looking at the Q1 itself, it's a rather boring quarter. It's the first one, and everybody who's into retail knows that it's the last quarter that actually sets the year. So whatever we do now, it doesn't really matter. It's Q4 that sets the year. But either way, it was a rather soft quarter for us, and we had a growth of 6%. It was January was rather bad actually, and that came with, we do think that depends on our very strong performance in December. So we sold out some of those really good items that you need in Q1, because Q1 is people are normally quite price sensitive, and if you want to buy something, you really want to make a good deal. So having access to campaign goods is really important in a quarter like Q1, and we sold a little more of that than we thought we would in Q4, and that affected us in January. As the quarter developed, we actually managed to get up to higher growth rates in both February and March. But it was a rather soft quarter also in relation to that the Easter it was in Q1 this year. It's been in Q2 the last 3 years, I think. We also had, as most of you who live in the Nordic experienced, it was I heard it was snowing in Stockholm on Friday, and there was some snow chaos in Finland last week as well. So the spring has not come until very late, I would say, like last couple of weeks. So that has impacted Q1, and that is of course a timing issue. But given that we set our full year guidance, that is 5 to 15% growth for the year in February, where we knew how January was, and that was the worst month. This was kind of what was expected from our side, even though the analysts expected a little more growth. Looking at the other parts, I think the profitability is slightly improved from last year, and what we always said, that every quarter needs to be profitable. Q1 is of course a small quarter, so just getting above the zero, but so we had 1.2% adjusted EBIT margin. Gross margin improved compared to last year, and we generally have a good stock composition, so and no old stuff, so it was okay. If we look at our core KPIs, we can see that this is one of our most important trend that we follow, that our customers continue to buy in more than one category. So it's slow moves, but we have a consistent move for our existing customers. And if you look at these numbers, you might think that, well, it didn't change too much. What does affect it is that when you get a lot of new customers, as we did in Q4, they normally start with buying, being a one category buyer. So most of them that came into Q4 are one category buyers now. As they develop and become more loyal, they will fall into the category that we can move. But this is something that we really keep track on, due to the fact that this is what makes customer more profitable for us. A lifetime, they stay longer, they come more often, and the average order values are usually higher as they shop in more than one category. So this is a really strategic KPI that we follow really closely. Moving on, we decided this quarter to put this overview in our earnings call presentation, because we talk a lot about our average order value, and if we look back, it's always been higher than our peers, but that's really important factor in order to be able to make profits and make more profits than most others in the industry. Looking at the last 3 years, we actually see that it's continued to increase, and surprisingly to me, because I always assumed, and I'm a risk person, so I try to always assume that it's flat and not going to go up anything, because then I get positively surprised and don't take too much risk. But we see the trend that it continues to go up, both for Boozt and more surprisingly for Booztlet. The reason that it does this is the last slide that I saw. So people continue to buy more in each basket as we have more categories. So I might be in the shop to buy from a pair of jeans for myself, but I put in something for my kids as they need it. And this is the target group that our customer are the ones that really appreciate convenience. So for them, this is an easy way of shopping, and that's what we're trying to cater to. And as you can see, the gap towards our peers is really sticking there, and this is one of the factors that we are more profitable than most of our peers. And now the most exciting slide from this quarter, and the most exciting news, and this is something that we have spent quite a lot of time on over the last year. Our expansion plans. So we have looked into different way of expanding our warehouse footprint, and we had one warehouse, or it's three houses, but it's in one lot, and it's a campus. And that has been a really good benefit for us, that we can work in one plot due to efficiency. We can do one shipping, and we can be very efficient with that. At some point, you grow out of capacity. So we looked into that, but actually managed to find a way that we don't need to move away from the existing facility, but we can stay there and work with extra, not buffer capacity, but use more refill processes. So instead of just adding auto stores as we've done historically, we can work more with refill processes. So we can actually AutoStore can be the limit in terms of output capacity rather than storage capacity. And this means that we can use our investments for a longer time. This is really good news, both from an operational point of view, because we take less risk. We can stay in the existing operation. We can just add on capacity. And then financially, it also is much less riskier, as we can continue to grow gradually into something, and we won't get these big jumps in investments that are really, really big, but we can do continuous investments, which also means that our depreciations and our fulfillment costs can be rather stable and grow, and come in line as we grow. So this is a really, really important part. And I'm not going to go into details because I know you have questions around it. So I think we can discuss it more like that. So then finally, I just wanted to share our outlook. As I said, the expectation is that we will grow 5 to 15% this year. It's a rather broad span, and it's actually the same span as we said last year, where we ended up growing 15%, and 15% is probably where we will be happy and satisfied, because we are very competitive in this business. But 10% growth is what we believe is most reasonable given the circumstances and where the market is right now. 5%, hopefully not, but we need to make sure that we have some kind of jiggle room, because we don't know how the market is at the end of the day. Even though macroeconomics talk a lot about positive signs, and we also see that obviously, but the consumers, and we experience this especially in Sweden and Norway, consumers act upon what they actually have in their wallet. And for interest-sensitive countries such as Sweden and Norway, the amount that you pay on your interest on your mortgages are just higher than they were previously. And this is something that affects the customer. So we need to have that jiggle room. In terms of the adjusted EBIT margin and profitability, we're trying to get to our 10% goal within 5 years. And that means that we should grow on average 1%, the profitability 1 percentage point per year. So that's the ambition. Given the insecurity in the market, we put like 5.2% would be in line with what we had last year. And the reason we have to have that at the down end is if the market is really, really depressed, then I think there's more likely to be a price risk if since we buy inventory, then we need to make sure that we can get that inventory out than anything else. But the ambition is absolutely to go for the higher ends, obviously. And then we will invest 150 to 250 million in capex, where around 100 is development, so 100 to 150 related to our warehouse, where we're now consolidating 2 cubes. So we're working on finding a way where we can take away manual work between different cubes. That's quite a lot of work. And this is a new thing that hasn't been done before. So we're testing it, but we see very good results. So I hope that this will be up and running in Q4. And yeah, that was basically it.
Very good, Sandra. Thank you very much. Yeah, let's jump into some of the questions that came here. Perhaps moving a little bit back to this slide. There were a question regarding what impact does inflation have on your top line or your AOS? You can say we've been used to quite a high number of inflation the last couple of years. Do you make any adjustments to these numbers, or otherwise they should naturally go up with sort of like an inflation level?
Yeah, in a perfect world, it's right. But unfortunately, the consumer hasn't been really willing to adopt those prices. So we have had inflated input prices that we buy when we buy, but customers have been quite price pressured. So we actually swallow that. So I think there are a few brands that manage to increase their prices and still get the consumer to buy into that. But we do see quite a lot of customers, if they usually buy one brand and they increase that with 200 crowns, then they rather are loyal to the price point rather than the brand. So that means that we, and this is what we are really strong at, we see where the market price is, because we can see the trend basically after a couple of weeks live, we can see if this item is going to be sold or not. So I would say that inflation effect is rather small.
Very good. And looking a little bit on the warehouse facility here, there were a question: what is sort of the current utilization of your warehouse facility? And we should probably see it sort of like a moving average or something like that, because you're probably running on fairly low utilization right now. As you said, Q1 is a small quarter compared to what you experience in for instance, Q4. So,
well, we said that the current facility can handle up to around a revenue around 10 billion, and last year we were 7.5. But what we're trying to do with these processes and working with refill processes, adding buffer capacity where we can add, we will prolong that. So yeah, there's some excess capacity, but it's also continuous development. So I can't say at what, are we 80% or so, but it's more a moving target. Then we always need to be like 6 or 9 months ahead, because we do get inventory before a season, like a few months before a season. We always need to have extra capacity, so we always need to think what's coming. But I think the process that we're looking into now, it really makes us more efficient, and that's the really good part of it.
Very good. And also looking at this investment, a year ago at the Capital Markets Day, you said that you planned to, over a 3-year period, to return around 800 million SEK to the shareholders, and that's 1 year ago. So there's 2 years left of that. Does this investment change, or had you already calculated with some kind of expansion at some point of your warehouse here?
Yeah, we knew that we needed to do some expansion, but we didn't know, because when we looked at the opportunity, we looked at many different ways of doing it. But one alternative would be to open a new site where we would migrate over to that one. And that would have been an investment of around maybe 2 billion SEK or in that range. That would, of course, put our balance sheet in another situation that it is now. And that's one of the reasons that we're happy with this plan. But this 800 million is what we're planning to return to the shareholders. So we bought for 187 million last year, up until the AGM now. now the board is just looking into details on how to release the next program. So I would expect that will come in a few months or so. But the plan is to return those 800 million. But of course, this gives us comfort. And then when we have this plan, and for me as a CFO, you know, I can breathe calmly now. We can do our cash management, and I think, you know, if we can continue to develop our cash flow and how much how much cash we generate and know what the expansion plan is, it's of course a good position to be in relation to being able to put something back for the shareholders. At the end of the day, that's what we're here for, right?
Yeah. So building a brand new facility was also an option that was actually in play. Yeah.
Yeah, you have. We think it's important to evaluate all the different alternatives there is, because obviously we've done a little bit of patchwork in the existing one. We started with one building and then you add on, and at some point we had some consultants looking at it, and of course maybe then you'd like to do a state-of-the-art one, but we realized that just doesn't fit us, and the existing facility is very good. And also the investments we've done back, our first AutoStore was installed in 2017, and we still use it. We haven't thrown a robot away. We haven't needed to discard. So if we can continue to use these facilities for a long time, of course the return on invested capital will be very high. So we want to make sure that we gain those benefits. And since we are in full control of the development of the systems and making it more efficient, we think that this is much more a Boozt way of doing it and less risk, and we can maintain a very good balance sheet. And I think that's been one of our benefits over the last couple of years, that we didn't have to make short-term decisions, but we actually always can do what's best for the business long-term due to our healthy balance sheet, and I'm very happy about that. Perfect.
Sounds very good. Then there were a question regarding on your, maybe I should move the slides here a little bit to this one. There were a question regarding your marketing spend. Digital marketing spend seems to be rising. Do you need to invest more in marketing to keep your presence in the market? And I'm not fully sure if that's what we're seeing on this slide, but maybe you could elaborate a bit on that also.
No, around 10% marketing is what we have had over the last quite a few years, and it goes up sometimes and then it goes down. Looking at overall, the cost per click for online marketing is still below what it was 2 years ago, 1.5 years ago. We also see that there are opportunities on offline marketing, and we still spend quite a significant amount of our marketing efforts offline, being TV, billboards, radio, whatever. And so we see that it's quite okay. And that is obviously due to many peers. Either there are some German that are focused more on their home markets. There are some of the local players that are financially strained. Then of course that limits how much they can invest. We just continue, and again, that's one of the reasons we can do that, because we finance our own growth, and we have a healthy balance sheet and a lot of cash. So we can continue to base our investments on the metrics on how much can a customer how much can we afford to invest in a customer and still make sense from a lifetime value. What we do see going forward is, of course, that the scale we have will give us benefit, both in terms of offline, and that is quite easy to understand, that we are quite aggressive. If you look in Copenhagen, we are quite overall, you can see us quite many places, and we even had brands saying you're taking too much attention. So that means at some point, from a percentage-wise, we will continue to invest the same millions, but it will be less in percent. So that gives us some scale benefits. Also, what we're doing, having more sales in the app, having the loyal customers that buy into more and more categories. You don't need to go through Google or so on and use online marketing in the same extent. We will still use it, obviously, but not to the same extent. So that will give us some benefits going forward, basically.
Very good. And sort of in terms of marketing and competition, there were a question here. Are you observing new competitors in the market? And from my sort of personal point of view, I have seen the Chinese team who do a lot of marketing recently. Do you feel that competition?
Well, overall, the competition is where it usually is. It's not a big change in the landscape, and it is also quite a hard sector to enter at this point because it's quite investment heavy. Temu and those alike they're very active. We see them. Obviously, we get stats on how much they invest on Google and so they're very active. But what they can't do is they don't sell branded goods. So if we spend a lot of bidding on like a Gant hoodie or polo shirt or so, they use the more generic parts. So it's more a blue shoe or so it's more to the non-branded goods that have that. We don't see that it's a direct competitive for us, and it doesn't affect our cost per click in to that extent. But they're obviously very, very active, and they do have an impact on the overall retail and especially in the low price segments.
Very good. And then there was a question, sort of, do you see any momentum within some specific product categories where Boozt or Booztlet performs sort of better than your peers, or in some of your sort of key strategic areas?
Well, in the first quarter, we were very strong in beauty, and I think that we've seen some of the beauty players. There's a Swedish one called Lyko. They also perform very well in the first quarter. So I think there's a market for the beauty segment, and I guess that's the lipstick effect that everybody talks about in a recession. That was very strong. Sport was also very strong, actually, and that surprised me a little because the sport verticals have been fighting for quite some time, and it's been a lot of price pressure. But sport really performed well in the first quarter. What we saw was that men's fashion did not perform at all. So looking at that is actually something that we've seen before. When economic times are a bit difficult, men seem to hold back to a further extent than women. And also, you also shop later in the season. So you don't buy shorts until it's 25 degrees. So we think, and we actually see that this week, and when it was sunny, then men started buying again. So the delay of the season is actually impacting the men's performance. So I hope all men starts buying now.
Yeah, and just a question from my side on this thing with the sort of the late spring, summer. We saw your working capital go up some 50%. It's almost around 1 billion Swedish SEK. Could you put a few words on that? Is that related to this, or are you also building more capacity, more warehouse?
No, so working capital is almost only inventory driven, and of course timing of both when the inventory comes into our warehouse, which was earlier than last year. That means that we've paid quite of the accounts payables related to that, so that worsens the working capital KPI, obviously, and then the delay of the season. So it is season related and timing related, and it's been quite a lot of changes in timing of in deliveries due to all the supply chain issues that have been over the last couple of years. So there's a lot of changes. So our cash flow, and since cash flow is timing, there's quite a lot of these changes that makes the comparison a little bit harder. And it was the same last year, but then it was on the inbound or in the beginning of the quarter, but it's timing. I think overall our inventory position, we are very obsessed with not being like building inventory and then have to do a huge write down. And if you look in our finances, we never done that, but we actually write down things continuously to make sure that everything is fresh and clean. That also means that we can focus on the current season, don't have to focus on the last season. So there's no old stuff. I'm totally obsessed with making sure that it's not. So now it's just the spring stuff, and obviously when the weather becomes better, and yeah, as I said, we saw this weekend, that helps.
Yeah, and also if we look at Booztlet, I think we saw quite good growth in that area. Sort of where's that the growth coming from? I think you also said in the report that you had sort of limited campaign buys, meaning that you're not able to buy cheaper goods for your Booztlet platform as you probably were in the past.
Yeah, and that's always like a constant battle, or what to say. There sometimes there's access, sometimes they're not. It depends on timing. How many? We had a few buys last week where now things are starting to release. I think it was cancellations from other retailers that were able to pick up, but Q1 was quite low on that, and I think it's due to brands having quite a tough time, so they don't have like any extra inventory at hand because they need to be sure that they can sell it due to cash restraints, basically.
Very good. I think we're through most of the questions, but I have a last one from my side, also on the growth, where we saw some pretty strong growth in Germany, of course, from a small number base in absolute terms, but in percentage wise, it's quite good growth. But we actually had the feeling that you were downscaling a bit on Germany and on Holland.
Well, for Boozt, we focus on those countries because we got quite good traction there. When it comes to Boozt, we are more opportunistic. So there were a few opportunities this quarter. What we've done is like tweak the offering. So when looking at on Boozt.com, if we sell outside of the Nordics and inside as well, but then that's been a problem that not all orders have been profitable. Germans have a very high return rate, as one example, and that's not good for profitability. So what we've done is tweak the offering there. So if you, as an example, like if you return the whole order, then you need to pay the shipping fee for the returns and such. So instead of some retailers put like return fees on everybody, we try to focus where the problem is. So we've done a few of those changes, like what is the minimum limit that you can buy for and such, which makes that we can make money on all of those orders. And sometimes there's an opportunity and then we take it, but then it could be the second quarter will be much less. So that's more of an opportunistic approach, while we're more strategic in the Nordic countries. So Finland, as an example, was it was our strongest growing country in the Nordics in Q1. And there we are investing, like now we're sponsoring the Finnish ice hockey team, which I think is like the biggest proof that we're serious and really want to build a household name in Finland. So there we're working on much more strategic approach to building the brand.
Very good. We'll conclude by that. It was a pleasure to have you here, Sandra. Thank you very much to you and for Boozt for doing this event today. And thank you to all of those who listened in. We can just hope for that the summer is arriving now. I think you even celebrate the Valborg today in Sweden.
Yes, we will burn some sticks and things, and my kids will open the pool because now it's springtime according to them. So we will do springtime now.
That's very good. Well, we wish you all in Sweden all a happy Valborg in Sweden then, and conclude by that. Thank you very much.